Hello everybody, welcome back. Let's have a look at XRP and Bitcoin, because it would appear to me on the face of things that the consolidation perhaps might not even take place as early as we thought, and in fact there could be a very strong argument for a massive bullish move for both of those coins. Alright, so first of all, before we start dissecting these charts for what they're worth, and they are actually worth a fair bit on their own, we really do need to look over to this chart, which is the dollar index, okay, the Dixie. So this chart is a monthly chart, okay, so each one of these candles is a monthly, and what we see here is that we've basically broken this level of support here, and this is catastrophic. It's tragic for the Dixie. It's terrible. Does this mean that it's going to go down further? Well, I mean, at the moment, technically, it would appear that we already are. This is the 200 exponential moving average, okay? The last time we came down to test this, which was in 2017, arguably at the same time that Bitcoin rallied massively, okay? So as we saw this coming down over that period, and then Bitcoin crashing as it went back up for the next year, we are finding our way back down to this exponential moving average, all right? So because this is an extremely lagging indicator, because this is a monthly chart, you have to take this with a pinch of salt, because yes, there is a chance historically that we will bounce from these levels, and a bounce from these levels would cause significant downtrend for everything: stocks, commodities, cryptocurrencies. That's just the way it works, okay? It's just the way it works. Now, if we were to break down from here, and technically, you know, we can have wicks down. We had them in the past. You know, this is January 2018. You know, it's February. You know, basically when Bitcoin has finished its run and altcoins were still continuing to run before everything collapsed massively. You know, are we going to see that take place now, or will we bounce from this level? If we did bounce from that level, looking back in history, the bounce has been relatively slow. Now, also looking back in history, we weren't in any kind of global financial crisis at this level. Not at all. We weren't in a pandemic. The Fed weren't printing dollars like it was toilet paper. So it's a different situation when we saw this to when we saw this. Now, when we look at this on another way, we've got a higher high and a lower high here. We are also forming what looks to be like an inverted head and shoulders, perhaps, although that be a little bit messy. So that lends itself to the idea of a bounce here. But if this didn't bounce, if this did break down, it would be significant. Last time we broke down from the 200 exponential, we broke down massively. Now that, when we're looking at a chart like this, you have to bear in mind that things are just different, all right? Things are different. 18 years ago, the world was a different place than the world we live in today. And there was certainly not a situation like the one that we're all facing at the moment, socially and economically. So, you know, when we look at it from that perspective, from the perspective of dollars being printed, was it 22% of all US dollars were printed last year? And probably more than that now, because I remember that statistic was like over a month ago, so it's probably more than that now. I don't see any signs of slowing, so all of this does point to the fact that this would break down. However, you know, that is, I suppose, a fundamental analysis of what could take place. On a technical analysis perspective, it does look like it lends itself to at least a short-term bounce, okay? And that is probably the way that I would be looking for this. Now, because I said this is a extremely lagging indicator, it's a monthly chart, I can't predict to any degree of accuracy if or when that bounce will take place. But at the moment, we are literally closing. Well, I mean, this is a brand new month at the moment. There's a lot that could take place in this month, but at the moment, the candle body is below that 200 exponential. My exponential moving averages, by the way, are unusually fat, so it is definitely below that line. So that could lead to a giant pump, okay? A pump that we're not expecting, a pump that will blow most bears out of the woods, and a pump which could lead us to significant all-time highs, lower 20,000s, shouldn't really be a problem at that point with a chart that looks quite like that. So this is the daily chart. So one thing we have to look at on Bitcoin with this daily chart is the formation that it's taken on since this bull run. Holding above the 10 exponential all the time, coming down to test it and being held, coming down to test it and being held, coming down to test it and being held, down to test it, breaking up, and then when we finally did break down below it, it only took a few days. Only took a few days for us to break all the way up to a new all-time high, come down essentially to test it, down to test it. So there's a pattern forming there, a pattern very, very similar to all the pattern that we've seen for the last few months. And given what I've just told you about this Dixie in the fundamental time frames of why that Dixie is looking that way, and there's no signs of that that policy changing at the moment. It can't change, really. It's not likely to change until, I suppose, vaccines are rolled out and people feel a bit more safe and the economy can find its feet, in a realistic fashion. At the moment, stocks are being propped up by this method, all right, which is healthy, I suppose, for stocks. It's basically inflating a bubble, all right. This can't go on for a great deal longer. It will be devastating for the economy in the long run. Everybody knows that, but this is basically like sticking a plaster on a gaping axe wound. It's the only thing that is possible to stop the absolute worst financial crisis maybe in living history. So this is the only weapon that they've got to not stop it, but I suppose slow it or postpone it is probably the best way to look at it. Anyway, all of that is good for any kind of commodity and I suppose stock in a way, and obviously cryptocurrency. So like I say, that is a lagging indicator. It's a monthly chart. So at this very moment in time, the Dixie is making lower lows. So with that knowledge that it is making lower lows, it's reasonable to assume that in the very short term, Bitcoin and cryptocurrency in general has every chance of making higher highs. Every chance. Excuse me. It's got every chance of making higher highs because of that, okay? But if this bounces, then it's different. But we're looking at two different types of time frames. We'll bring this down now to a daily time frame to see what it looks like there, and it looks horrendous on a daily time frame. We'll bring it down a little bit further to an hourly time frame. It looks terrible there. It looks terrible on every single time frame. So maybe the bulls have got this one in the bag. There's nothing stopping this demise of the Dixie. So I would suggest at this point now that yes, a correction is definitely, it's a certainty, but not yet. All right, not yet. And what this is likely to mean, though, is that when we do make this next move, and if we do make all-time highs, and if we start rallying up into the upper 20,000s and beyond, then the correction will be significant and long-lasting. If the Dixie decides it wants to bounce. The cash is king, but at the moment the king is hibernating, unfortunately, and it's basically allowing assets to run amok. Now, if we just put that knowledge aside for 1 minute, so forget all about the Dixie, it doesn't exist, we're looking at the Bitcoin chart. What we do have on here is money flow index, plenty of room to move, curling up, ready to go. The RSI reset significantly, curled up, ready to go. However, on the daily, if we do look at it a little bit more carefully, we do see a long history hit now, basically going from all the way back in October of bearish divergence forming. Right? It's not perfect. It's not perfect, and it could lead to another pump because there is a trend line here, but it's not exact, but it's very, very steep. It could lead to, and probably should, in all fairness, lead to another pump before it comes down. MACD, it's showing bullish momentum. So I would suggest that if we break above this level here, the all-time high, 20,000, at that stage then we will run, and we will run hard and heavy. And in all fairness, I don't think alts are likely to benefit from that a great deal, because the Bitcoin dominance will launch, and alts will be sapped of their satoshis, and that will transpire into their dollar value. There'll be some, obviously, that are the outliers to that rule, but generally that's how it's likely to work. I mean, I think things will all see pumps, but Bitcoin will basically drink the Satoshi blood, really, and we'll see the devaluation of many, if not the vast majority of crypto assets. Now let's have a look at XRP. Now XRP, a different chart altogether. Massive pump, and obviously we were all on the right side of this one, so we were very happy. However, I again was expecting a consolidation phase with this one, but now it's taken on a bullish form of its own. We have retained the 10 exponential here and here, and now we're even riding the 7 simple moving average. This doesn't look a great deal like consolidation anymore. This, to me, looks like it wants a little bit more continuation, and it certainly could do that. Now, you've got to bear in mind that this is going to be extremely volatile, whatever it does at this point. If we're trading this one with any kind of leverage, I'd leave the leverage to a minimum, because you won't need it, because the asset itself is going to be making giant moves. I mean, just even this little one candle here today looks minimal, but what is that? It's a 3% move. It looks like a pancake, but it's not. It's a 3% move. If you were to talk about Ripple making 3% moves a year ago, that's a big win. At the moment, it's barely visible on the chart. This, even though it's curling into a bearish formation, it's certainly not bearish. It's still massively bullish, and the RSI is healthily resetting at this point now, and could quite easily make a pop-up. Money flow index again could easily pop up. These moving averages are a perfect spread. They're all facing up, each one of them, and they are all ready, if it wants to make another leg up. So I'm putting out here right now a very bullish case, all right, a very, very bullish case indeed for both of these. But much of this depends on the Dixie, and the Dixie historically, last time we came down to test this exponential, we did break below it, then we finally did bounce from it. And the bounce, over a long period of time, we're talking like over 2 years there, did rally. So again, it's very, very indecisive times. But as of the very short-term time frame, I'm talking the rest of this week into the weekend, things are positioned for Bitcoin to rally. What I would suggest do at this point now, for me, not for you, I'm not going to tell you how to make your trades, but there is a very strong argument now for bullish moves. And even though we're right at the top here of the all-time high, deadly area to be in any kind of trade, because history would say last time we were here we retraced significantly, and the last times we tried to break above it, even the first time, we crashed, a big crash. What was that? From top to bottom, 16% down. And then the last time we tried it, what happened there? It was about a 10% down. Yeah, just short of 10% down. So it's a very volatile area. I would be very careful trading one way or the other with this one. But I have to say what I see. I see us holding these moving averages. I see the moving averages in perfect spreads. They're all facing up on both of these assets. Dixie is down massively, historically almost. And the case is looking very, very bullish at the moment. I would definitely say, if you're undecided, don't trade it, because whichever move it decides to do, it's going to be very big. We're talking 10% up, we're talking 20% down, we could be talking 20% up and 60% down. We could be talking a whole amount of ranges which are almost unimaginable to try and picture. It's difficult to actually imagine how this combination of events will play out, knowing what we know about historical action on the Dixie, historical action on Bitcoin, and what happens when we catch a bounce, which is essentially where the Bitcoin all-time high was in 2017 into 18, and what then transpired into a giant giant bear market. It's all interlinked and it's all relatively complex, but it can also be pretty easy if we just try and balance that knowledge. Anyway, I'm going to leave it with you there. I've got very little more to say on this because at the moment we could be in what's considered an accumulation phase for both of these assets, accumulating around this zone between, I suppose, 18 and 20 could lead to an alt season. We have to focus on this, and this is the main thing to look at. Anyway, I'm going to leave it with you there, but I hope you have a nice day. Oh, and before I leave, we can just admire how my bot's been doing. Another 2 or 3% move over the last few days. The bot has made me 0.65 Ethereum over, basically we'll call it just under 2 weeks anyway. It's a 2 weeks period. Started with 2 Ethereum, now I've got 2.65. Join the bot club. I've got a Telegram chat. Join that. We can talk about bots until the cows come home. Until then, I'll leave it with you. Have a nice day. Take it easy.